CNBC-TV18 EBIX Cash Studio.
Welcome back. Well, we have, I think, a few minutes before the pre-opening rates kick in. Ashish Chaturmohta is joining in. He's the Director Research at Sanctum Wealth Management to give us some F&O cues. Ashish, hi, good morning. What are you looking at in terms of individual stock ideas today?
Hi, good morning. So I think, till the time Nifty doesn't break 17,500 on closing basis, we believe that the structural trend of the market is positive. And if you look at from all-time high, we are just off 200 points. And within this sell-off, there are many, stocks which have seen reasonably good profit booking. So there might be a lot of, buying interest at lower levels in most of these IT names and, selective large cap pockets which have seen some profit booking. So all in all, I think till the time 17,500 is not breached, we are structurally on the long side, and we would recommend all our calls on the long side. So first long call is State Bank of India. The stock has been consistently making a higher top, higher bottom formation on the weekly, monthly, all kind of chart frames. Here one can initiate a long, keep 450 as a stop loss. On upside, 480, 490 would be my short-term target in State Bank of India. My second call is on Tata Power. So Tata Power is a almost 13-year breakout on the long-term charts. We have seen a massive, delivery volumes picking up in the stock in the last couple of trading sessions, and the kind of breakout we have witnessed on the long-term, monthly and yearly charts. It looks like stock is poised for a move towards 165, 170 trajectory. So one can initiate a long, keep 145 as a trading stop loss. On upside for 165, 1670 would be my short-term target in Tata Power. Reliance is in a strong, uptrend, and after consolidating for almost 9 months, we have seen a continuous, breakout on the stock, and now we are seeing a surge in the OI buildup in the last 7-8 trading sessions. So here, any dip is an opportunity to go long. 2490 would be my trading stop loss. On upside, 2640 is a short-term target in Reliance. And last but not the least is Tata Motors, where in the entire auto basket, we are seeing a strong buildup of positions. So Tata Motors could be initiated as a buy idea. Keep 320 as a stop loss. On upside, 355, 360 could be short-term target in Tata Motors.
All right. Thanks a lot for that. Well, let's do one thing. Let us talk about the APM gas price increase that will take place from tomorrow. What does this mean for companies and stocks? Sonal, my colleague, is here with the details. Sonal, go ahead.
Thanks a lot for that, Sonia. Well, absolutely. From tomorrow, we'll see a hike of around 60 to 70%. That is the expectation in APM gas pricing. That is the domestic gas pricing. It happens every 6 months. From April 2022, it is expected to increase by another 60% because of the hike and the surge that we've seen in global gas prices. Well, of course, it is positive for gas producers, the likes of ONGC, Oil India, HOEC. However, it is negative for the ones that are using it as input. So the likes of fertilizer companies, IGL, MGL, and also the power companies which use gas could see some impact as far as the input costs are concerned. Now, Edelweiss says that it is positive for ONGC. A hike of $1 per MMBTU will boost the PBT by 14.5% on an annualized basis, but it also means that IGL and MGL will need to take 10 to 11% of price hike, a lot of it which they have already taken. Now, Jefferies also put out a note where they said that accounting for the price hike already taken, another 10% hike is required by IGL and Mahanagar Gas. However, the concern is further price hikes that will come in from April 2022, because if the current spike in international gas prices continue, domestic gas prices could touch as much as $9, that is in October of 2022. And this could lead to a sharp reduction in EBITDA of all these user companies. For Oil India, of course, there will be an increase in domestic gas realization. So Sharekhan expects it to increase to $3.8 per MMBTU, which is right now at around $2.5 per MMBTU. However, a lot of it is already priced in. Oil India is up 40% this month, ONGC up around 20% this month, and both the stocks still at reasonable valuations.
Okay, Sonal, thanks a lot for that. Prabal Sen is joining us, Senior Vice President at Centrum. Prabal, good morning. Thanks for joining us. So, the question here is how much is in the price, right? Because as Sonal said, this hike might be priced in, but it looks like FY22 is going to be a year of big price hikes, and next, 2 revisions would be even larger. So, do you see a structural upside now for names like ONGC and Oil India?
Yes, I think the number that was mentioned about every dollar increase in average gas realizations has a 13 to 14% impact on profitability of both ONGC and Oil India. So obviously, I think we can probably make some educated guess on April 22 prices. October will be based on June 21 to June 22 averages. So I believe, given that there are more than 6 months to go, things could change from here. So I don't know if I have not calculated the $9 number that was mentioned, but very clearly from April, on top of the almost dollar per MMBTU increase that we are likely to see from tomorrow, there could be another couple of dollars of increase. So yes, I mean, upstream companies are very, very clearly in a sweet spot, irrespective of what is happening to their production numbers as and when they come, just on the basis of pricing alone. And you see that even crude has once again started to flare up. So both these mean that earnings trajectory will be extremely high. And as was mentioned, despite whatever has happened to the stock, the fact is that these, particularly ONGC, is still actually on just about on 8.5 times 1 year forward earnings as per our basic earning, and I'm talking standalone earnings. So from that perspective, I would say there is definitely much more steam ahead as far as ONGC is concerned. Oil India, perhaps a little bit of the positive is already in the price to that extent. So I would much rather be adding ONGC to my portfolio at these prices to play the price increase over the next 12 months.
Okay, so ONGC gets your thumbs up in terms of the upstream players who benefit. But what about the consumers, Prabal? Now, city gas distribution companies have anyway been hiking price. I think 2 or 3 rounds have happened in the last month and a half. How much more? Do you think they'll be able to completely pass this through? And even if they do that, what does history tell us? To some extent, do volumes start getting impacted?
To be honest, I think at least for the October iteration, our sense is that the additional price increase required would be around 3.5 to 4 rupees for both the domestic and CAG segments. If we go by the past 2 years' experience, any increase in domestic prices has been promptly passed on. And therefore, we would expect that there's a decent chance that I think companies would pass it on straight away, depending on what the exact price is. We expect about $3.1 on an NCB basis to come through tomorrow. So my sense is that they will pass it on. As far as impact on volumes is concerned, I think it's a couple of things. One, you have to also look at when the last time prices were at about $5, petrol and diesel prices were perhaps almost 40% cheaper than they are today. So that does make a lot of difference. When you consider the price of switching for a customer, for example, back to diesel, there's a 50-60% differential today between petrol, diesel prices and CNG. So will a 3.5 rupee price increase incentivize a switch back to traditional fuels? Unlikely. But does it lead to a more conservative driving behavior? Maybe. You have to also factor in that we are anyways working with a fairly low base still.
Sure.
The recovery back to state transport and public transport is yet to happen.
Yeah.
So I would think at least October demand impact will be limited. April, given that there's another 6 rupees increase that could be taken, we'll have to see what happens for FY23 volumes.
But putting all of this together, what do you think the damage could be for stocks like IGL and MGL? I mean, Jefferies put out a report where they said that there could be a 40 to 60% downside to the FY24 EPS for names like IGL and MGL. I mean, that's significant, right? Would you be as bearish?
To FY24 EPS, you said?
Yes.
So we've not put out FY24 EPS numbers yet, to be honest. So I wouldn't be comfortable commenting on it. But if we look at FY23 earnings, yes, there is a downgrade. We've not put out a note, so I cannot put out a percentage number. And one thing that I said needs to be kept in mind is that this downgrade in earnings assumes that there will be a steep fall in margins and these price increases cannot be passed on. We probably share a bit more of an optimistic view. Our sense is that the market can perhaps absorb these price increases, if not at one go, on a gradual level. And, the market volumes, even oppose this price increase, really, given that there is very little alternative and the alternatives are all priced extremely, extremely highly. In the last 2 years, the differential has only gone up. So even a 20% or 20-25% price increase that is likely in prices of CNG and domestic over the next 2 iterations, we don't necessarily believe that it would collapse the earnings to this extent, as you just But, since I've not done my numbers, I find it difficult to comment on the exact specifics. But we don't share that kind of pessimism, no.
Okay. Prabal, just taking a chance here, I mean, since you cover energy, I don't know whether Coal India falls under your mix? No.
No, our metals analyst, Ashish Kejriwal.
So let me ask you a different question. Given the fact that, in general, energy prices are high, oil, look at what's happening, gas demand continues to be very robust. In the present context, this is a year when the government is keeping on repeating that they're going to go ahead with the BPCL divestment. So is this a great time for it? And then would valuations perhaps be sort of top dollar given the market realities?
Yeah, I think it's a good time to sort of push downstream pace after a fairly long time. Maybe after, if I look at the last 3 quarters, Singapore margins have finally started to, recover, because some part of this rally is also driven by sharply ahead of demand estimates across the world, whether it's in crude or in terms of gas. So therefore, obviously, there is a bit more optimism around GRMs for the downstream players. What we see is almost a dollar improvement has happened in the last quarter. And that is despite the fact that diesel remains tepid. Fuel consumption growth continues to move up gradually as our economy is opening up. Fuel retail margins, despite the higher commodity prices, have been kept high. And I think that's a very good example or analogy to what is likely to happen to gas. Look at what has happened to fuel retail prices, and yet fuel consumption is up 10% YOY because of the lower base, of course, in the last couple of months. So if you put it together, I think, and the possibility of further inventory gain, at least in this quarter, I think PPCL, HPCL's operating earnings should actually continue to improve over the next 1 year or so. So yes, I mean, if somebody is interested, and we don't know exactly what the status is of the bidding process, but this definitely does help from an earnings profile perspective, at least in the next 12 to 18 months.
Okay, Prabal, we'll leave it there today. Thanks a lot for joining us. Have a good day.
Thank you.
That's on the oil and gas space. But the